Eyal and I, we've been friends for a little over a decade, and we've been working together for about 5 years. And we actually come from the consumer internet space. So I used to make video games, and kind of some of the first video games for things that used to be called PDAs, and then over time they became smartphones, and then later on social networks. I had many millions of people playing my games, and we always had like an in-game currency. And so it always made me think about, wait, this is kind of like money. And it functions like money, and I would issue the currency, and people would buy the currency. Now they'd buy it so they could play the games. But that was kind of what I was into before I discovered Bitcoin. And Eyal is kind of one of the, I'll embarrass you a little bit, but Eyal is one of the kind of the fathers of online video. So Eyal used to have one of the biggest video sharing sites in the world, Metacafe, 50 million users, and eventually there was a competitor that you may have heard of called YouTube that showed up, and you know, it's a winner takes all space. So Eyal is number 2 in history, but was. I don't think anybody remembers number 2. But more importantly, we joke about this a lot. What was the difference between Metacafe and YouTube? And I think the big difference is that YouTube unlocked the long tail of user-generated video. It really let anybody create a video and upload it, and it turns out that this long tail is more exciting than the hits. I mean, a lot of people don't know this, but if you look at the top 1,000 videos on YouTube, all right, like the ones that have 1 billion views, I don't know, Justin Bieber's, the Katy Perry's, right, the most popular videos, and you add up all the top 1,000 videos, you don't even have 0.1% of the views on YouTube. 99.9% of the views are in the long tail. It's the cat playing the piano and the kid crawling on the ground, and like, you know, all those little videos that together collectively add up to most of the content that's there. And so that's something that we spent many years thinking about and trying to understand. And when we got into Bitcoin, one of our first kind of intuitive thoughts as kind of consumer internet folks was, what's the long tail of user-generated currency? When will there be a long tail? When will there not just be a Bitcoin and an Ether and a Dash and all these kind of top 10 or 20 or 30 cryptocurrencies, but when will there be millions of cryptocurrencies? When will the long tail open up? And if it does, and if people figure out how to do that, then the same theory from the internet holds up, it should be 2 to 3 orders of magnitude greater than the hits. So if we see 20, 30, 40 billion dollars worth of value today in cryptocurrencies, there is trillions of dollars of value that is yet to be unlocked, credit yet to be created. And I think that's what we're going to see happening over the next decade. And that's why we started Bancor. And Eyal will share with you a little bit more about some of the theory behind this and the phenomenon of ICOs in general, which I think are the precursor to what's to come in the next decade.
Thank you, Guy.
So, you know, everyone in Bitcoin have his own initiation story. When did you hear about Bitcoin? So, I want to share with you mine, which was quite, I would say, unconventional, because in 2010, I started to kind of look into the long tail of videos. Now, I was not looking at videos of cats playing piano. I was looking at videos of how money is created. I guess some of you may have run into some of those videos that are available in YouTube. How is money created in the world? And that was way before I heard about Bitcoin. And I kind of learned about the system, and you know, the first video I saw, it was like, that has to be some kind of fake news. I mean, that can't be true. And I started to corroborate and kind of research that. and find out that the system that we use today in order to kind of manage the money supply in the world is like really, really overcomplicated system that gives like very big powers to very few players, and that didn't make sense. What didn't make sense to me more than that is that no one knows about it. No one talks about it. I mean, we talk about money all the time, actually. Probably 90% of our problems in life are somehow around money in one way or another. But no one talks about what is this thing. And after studying about it, just because I thought it was interesting, then in 2012, Guy and myself, Guy was my kind of research buddy with all those endeavors, and in 2011 we saw Bitcoin, and that seems like a solution. Just like if you would be worried, let's say in 95, that there's a lot of, I don't know, censorship in press and media or something like that, and you would discover the internet, you would say, oh, this is great. You know, people can just send now, share information freely with each other. I mean, it democratized information distribution and democratized publishing. This is great. This is going to change the world. And actually, this is what happened to me in 95, and I was really excited about the internet. And I, started to work in that space, and it did change the world because it changed the way that we can communicate with each other. Today, everyone has a, piece of device in his pocket that using the internet, he can connect to anyone else in the world, sending text, images, video, live video. I mean, it's just amazing what happens in such a short period. And when we saw Bitcoin, it seems like, there is a new revolution coming. But, we are, both of us, Guy and myself, we're coming from a space where you want to build apps that have millions of users. I mean, if you're building a games, you're thinking about what game can I build that will have millions of users online. And when you're building an application like MetaCafe, before MetaCafe, my first startup on 98 was a social network. It was actually a downloadable application that you had to install. That was before the web was ready for application. But the question that you ask yourself is, how can I make something that will have, a lot of users and organic growth, and what would, what are the ingredients that I need in order to make that happen? Because it is a tough challenge. I mean, there are very few companies that are ever successful in getting like end user momentum, talking about application that everyone needs, like social networks, like group messaging, like online video, like online music. I mean, those are applications that almost everyone uses. And when I saw Bitcoin, I saw a great application, but the usage was very, very limited. I mean, I think that even today, for the most part, I mean, people using Bitcoin as an investment vehicle, so they actually invest in the idea of blockchain and cryptocurrencies by buying Bitcoins, which is great. It brings a lot of new money to the industry. I know a lot of engineers today that got excited about Bitcoin, and today they can, fund themselves and work on whatever they think they should work, because they made a lot of money from owning Bitcoin. So it did do a great service to the industry. But that was still, trading is something that most people don't really engage with. So what would be the killer app? And the rule about killer app is that it needs to be like 10 times better than what's out there right now. So, if I'm going to come out like Google did with a new social network, Google Plus, I think was and that was the second one, because before that they had like another one, I don't remember the name. But they made several attempts, but nothing, or we can talk about Microsoft Bing. Yeah, I'm sure it's okay search engine. Anyone's using it? I don't know. Because when you bring an alternative, it needs to be like 10 times better than the incumbent. And Bitcoin was not 10 times better than nothing, except the fact that it was private. So if you want to build ransomware, now you have a solution, because before that you couldn't. You know, some people say that the reason that Bitcoin was invented is to be able to facilitate gambling where you shouldn't. And we all know what people are buying and selling at Alphabet, right? I mean, this is the killer app. In some of the products in Alphabet, it's a literally killer app because you can buy weapons. But this is the killer app of Bitcoin right now. This is what you can do with Bitcoin that you cannot do with other solutions. And you know, that doesn't give a great, I mean, it doesn't give a great reputation. I mean, people from the outside looking at it and say, okay, so you can buy it in order to sell it for more. Where did I see that? Oh, yeah, pyramid schemes. Yeah, that's what you do there. You buy something in order to sell it for more. And you can use it to buy, you know, illegal stuff and to gamble illegally. And you know, that's what it is. And obviously, that's not the recipe for success in our current world, for a mainstream success. It can be successful on the fringes, but not on the mainstream. Yeah. We don't want...
And of course, that's a very distorted view, right? Of what it can do.
What it currently does better. I'm talking about what it currently does better.
Yeah, but we do now have, you know, things like Augur, for example.
Like what?
Augur, for example.
Augur is not there. Is it over?
We have prediction markets, right?
All those things are, you know, we are seeing a lot of beginnings. How many users are currently actively? How many people here using Augur? Anyone? You use? I didn't see one live market there. Maybe I'm not up to date, but as much as I know, this is all just theories, which would be, you know, I'm the biggest fan of Augur, right? I'm just telling the story about the past, not yet getting to the future. And the past is about what Bitcoin and other cryptocurrencies did offer in the last 8 years, right? Since they've been out. I mean, it's been a long time. And thinking about it more, why is it? What would be the killer application? I mean, everyone was looking for the killer app of blockchain. I think that was a big conversation that can be spotted in many places. And I think, like many killer apps in history, no one was prepared for what actually came. And what we started to see that on top of platforms like Ethereum, we're seeing more and more people using blockchain in order to raise capital for projects. And that's interesting. I mean, that's a legitimate use of money. I mean, if you think about money, how can we use money? Well, what do we do with this thing, right? We can do, like, there's a social network. What do we do with the social network? Everyone can use a social network in a different way. One person can use a social network in order just to follow his friend. Another one will use a social network in order to kind of join groups and debate with people that he doesn't agree with. Someone else would use a social network in order to market his own business and keep in touch with his customers. I mean, there are many uses, many ways that you can use a social network. It's still the same social network. And when we're talking about money, about a currency is also a kind of a network, but it's a network that the members of the network can send to each other value, which is measurable and not information like you would do in a social network. You would send value to each other. The people that are holding the same currency that I hold, it's very easy to send them value. If they're holding a different currency than what I own, so I should hope that there is a way to exchange between the currency, which is, by the way, where Bancor comes to the picture, but we'll get to that later. So, so there's all those networks of currencies that are starting to emerge, and people are actually using those new networks of currencies in general, using network of currencies in order to first collaborate with each other. It's a tool for collaboration. It allows us to specialize in something specific. Before money, and let's say, imagine a pure barter economy where people just exchange things with each other, it would really hard to become a piano builder. Let's say I play the piano, so I use that example. Because you would work for a year on one piano, and then what, you're going to exchange it for food for a year? I mean, it's just not going to work. But if you have money, then you can have piano builders. And it allows us to collaborate in a scale that we couldn't imagine otherwise. And this is, that's one use of money, as tools to buy and sell products and services from each other. It's actually trading labor, something that trades labor. But another use of money is that I can use my money in order to speculate. And I'm not using that term in a negative negative context. Speculate is some kind of a prediction. For example, if I'm lending someone money, I'm making a prediction that he will remain solvent and that he will be able to pay me back this money with interest, and that he will be honest to do that. And if my prediction is correct, then I actually earn money from that. Instead of my money just sitting there, I made the right predictions and I loan it to other people. And people are doing it all the time with P2P lending sites that are booming like crazy. Actually, it's amazing that they're successful, even though they cannot print money like the banks, but they are still very, very successful, just peer-to-peer lending. Another way that I can use money is in order to bet, gamble, hedge myself. Insurance is one example. I can pay money in order to make sure that if someone breaks my car, I will get a new car. Or if someone is breaking into my house, or if I'm going to get the red in the roulette. I mean, it's any kind of prediction of a future event. Derivatives are going into this category. But this is something that a use of money that a lot of people are kind of doing every day without even thinking about it, but they're hedging themselves, and they're investing in all kind of derivatives that would keep the value of their assets as they want to. Now, the third use of money is the most interesting one, is what Karl Marx used to call capital. It's using money as capital. It's where someone has money and he gives that money to someone else in order to build something that will take a long time to realize and to create value. And if you invest that money, if you finance a person or a group with an investment, you are actually sharing the upside. Unlike with a loan where you're getting a fixed return, here you will get your return will actually share the upside from the project. And if you invest in a nice little company that was sold for, I don't know, $10 million, so you may be very happy. And if you happen to give the same amount to Mark Zuckerberg when he started Facebook, if he remembered you, so you made much more money. I mean, you're getting a share of the upside in this type of investment. And this is like the third type. And if you look about all the different uses of money that I've just counted, each and every one of them can be done using current fiat digital currency in quite a convenient way. I mean, it's very easy to buy stuff. It's actually secure. It's safe. Everyone is doing that. There's mechanism to protect the consumers. You cannot forget your password and lose your money. If it gets stolen, then you can investigate where this money go through from my bank account to whatever other account. And there are a lot of advantages of fiat-based solution in many of those use cases, except one. The one that is different is investment, because in getting funded, it's basically illegal in the modern world. I mean, I cannot even write on Facebook, hey, I have this new thing, new ideas, and I look for people to help me to kind of capitalize it, and I'm willing to share the upside. Who's with me? It's illegal. They're going to put me in jail. And even if they would let me do that, and many people are interested, I'm limited to, like, I don't know how it is here, but in Israel, I think it's like 35 people that can participate. It's very, very limiting. And here we have a solution that we see recently, which called ICOs, which are based on a completely different model. The model of ICO is that you're not buying shares in any company. What you're buying, it's a new asset class. I like to call it, you're buying a share of the economy, of the specific project economy. For example, if you were lucky enough to buy Ether at the crowd sale of Ether when it started Ethereum, you bought a share of the Ethereum economy. You bought a share of their currency. It's like if I'm going to buy a large portion of US dollars, I will buy a share of the US economy. And this is what you do when you participate in ICO. And when you buy a share of the economy, guess what? If the economy grows, you make money. If I invested in a small island, and this island, I don't know, became a very hot tourist attraction, I invested in their currency. Their currency is, it's going to rise in value, like anything else. It's not shares. It's a completely different model. And the interesting thing about this model is that it's encouraging cooperation. It's encouraging cooperation because if you notice, for example, Ethereum is a good example. Using this model, Ethereum is open source. So they're actually raising money from the crowd. They're getting a lot of investment. They're building technology. It's open source, and everyone can use it. Everyone can take it. Everyone can evolve it. Everyone can fork it. But still, if you're thinking about it from the kind of game theory perspective, it actually, the best decision is to keep using Ethereum and keep holding the Ethereum. I mean, we've seen hundreds of currencies that just try to duplicate Bitcoin code and try to kind of pump and dump them or whatever and create like alternative to Bitcoin, and none of them were very successful. I mean, the only successful examples are those who brought really something new to the game, like anonymity or whatever, or speed, or a different mining algorithm. But when we look at the phenomena of ICO, we need to start thinking about how can people even build models that are compatible with the ideas that you have a currency, that people need that currency in order to use your service. Now, another great example is Golem. Golem. How many of you, by the way, are familiar with how Golem works? Like few, so maybe I'll kind of give a short review because I think it's a great example of what's an ICO and why this model is powerful. So Golem is essentially a network. They're building a technology that allows people to sell and buy processing power, CPU power, from each other. And everyone can become a seller, everyone can be a buyer, and everyone actually can decide that he's a software developer that builds modules that people can then use and run and execute. And whenever you do that, whenever you're buying from someone else in the network, you're paying with a currency that's called Golem. That's their currency. So as more and more people are using this network of Golem in order to buy CPU or processing services from each other, what you would probably get from clouds today, as more and more people are buying it, then the total market cap of the Golem currency is going up. Now, if the total market cap is going up, it means that everyone that invested in the ICO of Golem are actually making money because the value of their token appreciated. The team that kept some of the tokens to itself is also compensated and rewarded for its success based on how much they actually succeeded. And the nice thing about it is that the early adopters are all also compensated in this model. So if you were one of the first people that started to use Golem, just like being one of the first people that started to use Bitcoin, You sold the pizza for 30,000 Bitcoin, so you're going to be a very happy person for being the early adopter in a technology that actually really made it and become a worldwide success. So we're seeing a model here which has a lot of advantages if you want to compare it to what's out there, and encourage cooperation and reduce costs. We're actually seeing that even the marketing of those ICOs are using currencies themselves in what they call bounty program. People are paid with bounty coins in order to promote an ICO, to spread the message on the social networks, to open groups, to talk about it on Bitcoin Talk, to translate the material to different languages. And people are paid with special currency, which is made just for that purpose. And when the ICO is actually happening, then those people who help are actually getting some portion of the ICO, usually, the sub 1%, but this is a big opportunity for a lot of people to take part of those ICOs and be part of their success and be compensated based on that. Now, interestingly, we see that all those ICOs are happening, almost all of these ICOs are happening on Ethereum, not on Bitcoin. What's the reason for that? So I think the obvious reason is that Ethereum is the only native multi-currency environment out there. Bitcoin is a single currency. It's not a platform for currencies. I mean, Ethereum, they define themselves as a world decentralized computer. So in the world decentralized computer, I can implement as many tokens, as they call them, as I want. Where in Bitcoin, that's not really the mission statement, and there are some libraries and some layers that you can use on top of Bitcoin that would do that, but it's not natural, it's not something which is supported on the blockchain level. Now, because Ethereum was built for that, they allow much more that you can do with those currency. For example, you can make them programmable. You can set the terms of the funding, which is also something that is very different when you're talking about fundraising. Well, if I'm going to just buy something from you or give you a loan or even invest in a derivative, usually the contract that is required to do that is very simple. It's not a very complicated contract. But I don't know how many of you were involved in investment round, but those are like the most complicated contract and negotiation in the world. And the reason that they're so complicated is because there are a lot of levers and controls and protections that are put in there. For example, to say that you're going to get the money based on milestone that you're going to achieve, and this is part of the contract. And there's someone who is like designated to judge on that particular milestone, if you achieved it or not, or something in the contract that says that you don't have access to your own, if you get shares in your own project, if you get your own tokens, so you're not going to have access to them until 2 years have passed. We see that a lot. Why? Because you don't want to give shares to people that are participating in the project and have them dump those shares, in the beginning. So there are protections like that you can implement in Ethereum and you cannot do on Bitcoin. So the flexibility of the platform to kind of issue tokens that have any kind of behavior that you want is something that is very, very unique. I think this is what we see it there. I think that the most important implication of that is of the ICO phenomena, which is, again, what I believe is the first killer app that we are witnessing and seeing. And I'm happy to take any question about that. But the most important phenomena is that it gives birth to really a new kind of organizations. It's something between for-profit and non-profit. I don't know if you guys know, but Ethereum, which is, again, a good example, is registered as a non-profit organization, even though I'm sure you can imagine that those who took part in Ethereum made a lot of profit from Ethereum. This is why, the reason for that is that the structure of those organizations and the profit model is very, very different than what we see today on regular corporation. Well, if I have shares in a corporation, I'm entitled to the profit, to a share of the profit of that company. That's what shares gives me. Also give me control, but in terms of monetary compensation, this is what shares mean, that you are entitled to get a profit. So in order for you to make money, for the shareholder to make money, you need those companies to generate profits for the shareholders, and this is what they are concerned with. When we're talking about Ethereum, as an example, as an organization, that's just not the case. They don't need to generate profit in order for the people who invested in Ethereum to be profitable, to make money. What they need to generate is momentum, is user momentum. What they need to generate is as many people in the world and many ICOs in the world using Ethereum. And because a lot of people use Ethereum, you need the Ether token in order to pay all the fees in Ethereum. So the Ether token will be popular and useful and will get its value from that, from its utility. So we're looking about a completely new model for investment and for return on investment that is just is being born and experienced for the first. There's not a lot of, I think Ethereum is the only big success story. I mean, there are a lot of companies that raise money, but in a later stage. It started with Mastercoin that was not as successful using the same model. And today there's like every few days there's a new ICO. The last one is Cosmos, which is a cross-blockchain technology that raised $70 million within 28 minutes. I mean, this is crazy. So there's, there's no equity. They sold, again, their economy, part of their economy, instead of selling equity of control and created a situation where everyone will benefit from Cosmos being.
Was anyone here in November when Jay was presenting? When Jay was here? A couple of us? Yeah. Did anyone imagine that it would be as successful at that time?
I mean, there's a lot of new wealth that was created in crypto. I mean, there's $20 billion of cash. I mean, it's not like $20 billion like illiquid asset. $20 billion of cash that wasn't there before, that is like virtual tokens that people hold like private keys of, and they're thinking like, what am I going to do with that? I mean, you know, I bought everything I wanted on Alphabet, now what? So when you think about the most reasonable thing to do with your newly generated wealth is to invest it in the very same technology that made you wealthy and might make you even more wealthy. And by investing in those ICOs, they're pushing the entire ecosystem forward. And each ICO means another team of 5 or 10 engineers that's going to sit for a year and build stuff that they really, really believe in. They bet their entire career will be successful. Yes?
No, I'm just waiting until the little bit of skepsis that you're going to put in, because you mentioned investor protection in traditional investments. You mentioned that it can be implemented in Ethereum. The problem is that it is not being implemented in current ICOs. Yeah. A lot of those ICOs, developers can sell off their stake. So they have the proceeds of the ICO. They can pay themselves really hefty wages. There's no control on their stake, so they can sell off and just walk away.
Guy want to say something?
So I think that's a great point, but I think that the most important thing, there's this great line that I heard once, I don't know, a movie or something. You know, it doesn't matter where you've been, it matters where you're going. And I think that you're right, it's wild, wild west. It's like one of the greatest paradigm shifts in the history of mankind is happening before our eyes. and there's gonna be a lot of people who are gonna jump in, and they're gonna take advantage of it, and they're gonna make billions, and people are gonna do all kinds of scam coins. But if you look,
There's a reason why we have this legacy of
Tell
legislation on investment.
Sure,
There's
sure.
a reason why it's so strict in the States, because they have the longest tradition. Because we've had a lot of scams, and we will have, and maybe currently we already have a lot of scams in the Ethereum space.
sure, and I agree with what you're saying, but I think that what we see is that the underlying value of this is the democratization of investment, the democratization of credit creation, and the way that the internet democratized sharing information. And if you look at the trajectory, I think that, you know, it was crazy in 2016. Today, the standard is much higher. You can't do the kind of things you did last year. Last year, any two random guys would throw out a white paper on the internet and collect millions of dollars. Today, you have some pretty serious crowd due diligence, and you know, I think we've raised over $100 million in traditional venture capital over the years. I've never gone through due diligence, even in a B round, in a C round, like the kind of due diligence we're starting to go through at Bancor. We're being due diligence by thousands of people.
By a mob.
By a mob, sometimes we like to joke and say. But you know, and I think that you see on all fronts, you see people needing to do more serious legal structures. We're already doing it in regulated territories. We're working with serious law firms. You can check the identity of all of our team members. They can't exactly run away. The currencies are locked. If you see things like blockchain capital from Brock Pierce, a friend of ours who just did an ICO 2 days ago, right? He's now starting to have a much more regulated environment for actually building VCs on the blockchain, right? So you know, if we look ahead, I think that these kinds of protections are only going to be increased, and hopefully not in a way that takes away the real advantage of this, which is making this accessible to anyone. So you don't have to be just an accredited investor who has hundreds of thousands of dollars of spare money every year to invest, and the regular person who maybe wants to invest $300 or $1,000 or $2,000 in a cool project won't be able to have access to all these new innovations.
So, to add on Guy to what you just said, I think that it is there is a reason why those regulation and limitation were put in place. There is a reason, but not, some of those reasons, if not all of them, are not very relevant in the age that we're living. For example, online digital identity was not what it was 10 years ago. Today, when I'm looking at a team, and I can watch their Facebook, their LinkedIn, their endorsement. I couldn't have done that 10 years ago. And that allows me to kind of look into a team that I'm never going to meet. And I can do that remotely. And not only I can do that remotely, the fact that it all happens on forums and Telegram, someone else will do that for me. If there's the slightest problem, the slightest worry about some scam or people will talk about it. So yes, there's going to be some adjustment where some people are going to take advantage of the fact that this is new, I guess, and raise money and not fulfill on what they promised. And that happens actually a lot with the internet. When on 99, remember? It happened a lot because it's a new environment. However, the tools that we have on our disposal in order, for example, to be, and you're saying that some of those ICO don't have limitation, but some do. I mean, Melonport, I think we discussed that just a few days ago. They have 2 years block on all the shares that are given to the team. And I think that the market eventually is going to judge, what's the level that they expect in those ventures. And not only that, I think that it will be naturally evolving. I think that what we are seeing is that people are readjusting to the idea even that they can invest in technology. There's a great talk by Vinay Gupta that basically says if we will, we're going to have this crowdfunding model that's going to be the future, and then we're going to have flying cars. Because if you let anyone in the world to invest in what he really, really wants, a lot of people will actually invest in flying cars. If you are thinking financially and, would it be the one that works or not, it's a harder decision. But there's a whole new, I would say, different motivation of people. What do they want to invest in? It's not just financial benefit, but also things that they want to see happening and working for themselves. And I agree with you that it's going to be, it's going to be a rough period in the beginning, but at the end of it, we're going to see something. We're going to see an environment of funding that we have never seen before. And I think people will. Brock Pierce, we just quoted him that he's the head of Blockchain Capital, which is the biggest investors on all the blockchain space, investing in like everything. And the guy is saying that he thinks that within 10 to 20 years, no startup will be raising money in any other way. And I could not agree more. There's no competition. It's not a fair competition. It's like trying to say, okay, so what's the advantages of TV over YouTube? Not a lot. Not a lot. It's not a fair competition. You can do a lot more on online channels than you can do on TV. And I think this is a good example for that, which makes it a killer app. Any other question? Yes?
I think it's also might be important to emphasize that it's not equity, like you already did. But it's because at some point it's kind of like, I'm going to invent this really cool car thingy, and that's going to need oil, and I'm going to pay you in the oil that I'm going to drill up. So you pay me for the future of the demand of oil that there might be, which makes it really kind of weird and also really risky in that aspect.
I like to compare it to an airline that says, I'm not going to sell shares, but I'm going to sell my miles. And my miles are traded in the market. I'm only going to accept miles when you want to pay for flights. I'm only going to accept miles. And if the airline is only accepting miles, so you got to get miles in order to fly the airline. And if it's, let's say, United today, then not many people are going to, want to buy those miles. Probably we're going to see a lot of miles selling of United. But this is exactly the point. This is exactly the point, because if I'm keeping my balance, and I think this, there's a point to be made here, that we used to think about it as securities and currencies, right? Securities and currency, bid and ask. I mean, you use currencies to buy securities and then you liquidate it to currencies. But in this new world of assets, what's the difference between holding a Bitcoin and holding a golem? I mean, they both work the same way with shapeshift, right? I mean, I can just draw it to shapeshift, and in the other side will come out something completely different. So there's not a real difference between holding a currency and holding a security. If you think about it, holding a currency would be a prediction about the future of that group that uses this currency. So if I'm holding euros, so I'm like, I'm tying myself to the economic circles of Europe, and I'm making a prediction that it's not just all going to crash and burn, which it might, right? But if I'm holding Golem, so I'm making a different prediction with how I store my value. And my prediction is that, this is going to be great. This whole ecosystem for computers sharing computing power is going to be great. And this is what I believe in. And I think it's good for the world. And I'm holding some of my wealth there. And when I want to go to the store and pay, I can choose to pay with whatever I want because it's all liquid. Which, by the way, is the most important aspect of ICOs, being liquid. Being liquid is meaning that you don't need to chase, the guy who pranked you. You're selling the shares. So if there's a scam, it's going to end really soon and painfully, but at least it's going to, it's going to be visible to all, and everyone's going to know it's a scam because it just crashed one day and everyone's talking about it. So hopefully we learn from that something. But the liquidity is a very important component of it. And why I think it's okay to think in new models. I mean, again, what are bonds, right? What are bonds? Bonds are like different thing, paper you hold that you expect this company to pay you for, or junk bonds. I mean, it's a whole new category. Or miles. It's also a currency, miles. You can buy miles. In some places you can sell miles. There are markets for miles. These are currencies that issued by groups of people, essentially. I mean, one of the things that we have been working on and thinking about a lot is that those things are all the same. They're not that different. It's the same concept of quantity. There's always someone who can there's always someone who can print more. It might be distributed, like in Bitcoin, where every miner prints a little more when it's their turn. It might be in a crowd sale where you print a lot of it in the beginning. I mean, there are many models to currencies, but they hold the same. They have the same principle. Someone is permitted to print more of it, and people can transfer it to each other, and sometimes there's also a way to destroy it. But that's how currency works, no matter if it's a stock, if it's a bond, if it's a national currency, if it's a cryptocurrency, if it's a token that you use on Golem, they all work the same way. They're all the same product.
Well, I would disagree to that, honestly. Because if you look at the difference, if you look now, for instance, at the SEC and how it's interpreting certain ICOs and qualifying certain ICOs as to be securities, and I think we can expect the same here in Holland from the AFM, and they will probably start qualifying certain ICOs as to be in effect. And there's some distinctions to be made. I mean, we're all very enthusiastic here, and it's going to be a whole new world, and I very much endorse it. But I think the whole new world will also imply a whole new part of regulation. And to say that it's all the same, in my opinion, is not.
I agree with you.
Not necessarily.
When I'm saying it's all the same, I'm saying that it's the same technology. It's the same product. In terms of, I have an account and I have a number in my account and you have an account and I can move from my account to your account and someone can actually issue new units of that things, and there's a way of those units to be destroyed. In that terms, they are the same.
Sure, there are similarities,
but
there's also differences. So if I have a token that has a certain utility, and that is one of the main differences they now apply to making a distinction between being a security and therefore regulate it. For instance, if it has a utility and I have to provide a certain service, CPU usage or whatever, then you could say, well, actually my action increases the value of the token and therefore there's a trade and it's not necessarily security or a bond or whatsoever. But if I'm just buying something, hoping for it to increase in value, and it is actually, if you look through it, it could even be a share of the company, although it could be packaged in a different way, then hey, it could very well be a security and qualify as such, and then there's just old regulation that will say, hey, you have to, well, the SEC is obviously very stringent with that.
I fully agree. I think it's important to make the distinction of what is the technology, what it does, and how the government classifies it. And in the realm of what is the technology of what it does, I'm allowing myself to say it's all the same. In the realm of how the government classify that technology, I think that there's there's a lot to say about that, because obviously different jurisdiction would have different classification for those new types of assets that were not existing before. They are in effect something, again, like Bitcoin. I mean, how do you deal with that? How do you even try to regulate that? And with those new types of asset classes, I think the good thing is that you have a lot of countries, and each country can classify it differently. Now, countries, as an entrepreneur, I can tell you that they would tell me, and the advice is different from Ernst & Young, depends on what year you ask them. But when I came in '98 to start this social networking company, they say, okay, great. I think it was even the case with MetaCafe. They said, you know what, great, you should do it as a Delaware company in the United States, and that company should, issue the shares and hold the IP, and you don't want to do it here in Israel because it's such a mess with the government. And companies do that all the time. They register, they have subsidiaries, they have like sister companies, they do that all the time. So it's enough if there are very few jurisdictions, like there are today. I mean, this whole boom is happening when there are only 2 jurisdictions that were smart enough to say, hey, come here, register your foundation at Switzerland or Singapore, and it's completely legal here, and you can do that. You can raise money, and you can have your Swiss non-profit foundation or whatever entity that they deem legal, and if there are some jurisdictions that allow you to do that, so companies can do that, and startups can do that. It's usually not that expensive. It's something that is very flexible in terms of how companies are doing business. And I think that there's going to be competition between jurisdictions that would actually wish to provide benefits and to allow greater flexibility in order to see more people using their jurisdiction in order to raise capital, give work for the lawyers and make money.
Eyal, I think it now might be a good moment just to raise the possibility that the most recent European proposals, how that would affect crowd sales, because someone who knows it better can maybe correct me, but what I read is that the actual distribution of a cryptocurrency, of a digital currency, regardless of the character of the sale or anything else, simply they didn't make any. It's not necessary to make any other distinction except that it's being distributed in a crowd sale. That is something that needs to be that needs to fall under the AML or anti-terrorist financing rules.
In Europe.
That's what I read in the proposal. Did anyone see something else? That seems to be the latest news.
I heard that the SEC said Bitcoin was not money. Because in the money laundering scheme, they said Bitcoin is money.
Yeah. So I mean, they say a lot of things that may be contradictory,
Yeah.
right?
Yeah.
Right.
Correct.
And but it seems to be a very serious proposal now. At least we're at this stage where any issuance of any digital currency, regardless of what it might be for, whether it's being used in a financial sense or not, and there are many, and there will be many more who will not have a financial use, but that may actually, stop a lot of the possible crowd sales. So.
But you can also see it works both ways, because we are all very positive and enthusiastic about how great it is, and it really is. But you'll see that very comparable to the internet boom, that bubbles will be created, and bubbles tend to pop, and it's bound to happen. It's my expectation. Nobody knows when, but you can already see that a lot of projects are being funded. There's no real merit for it to be funded. And again, it's very similar to the internet hype. And then you'll see that regulators will start tying their knots and embracing it more, actually creating confinements to limit certain, in this case ICOs, but in general the whole cryptocurrencies space. So yes, there will be jurisdictions where everybody's very happy and look how great it is, but then we'll see the failures, and that will hurt, and there will be a cry for more regulation, I expect.
I want to take a question from the back, but I just wanted to make one more comment. I think that you can look at this with the long view, and then you can also look at it with, of course, the practical short view. You should be smart about how you go about things, right? So I think long view, there are public databases now. Things are going to change. The end game is the governments are going to eventually issue their own sovereign national money directly to their end user, so to speak, and not through an intermediary like a banking network. Right? And there's going to be wild efficiencies, and your VAT's going to be programmed into your money. And you don't need all the people going around collecting it, and you'll discover that with 2% VAT, you'll collect more than with 18% VAT. And then when your parliament changes the laws and now it's 2.1% VAT, they've got the private key, they'll go in, they'll change it in the cloud, and the money updates itself, right? And so we're talking about efficiencies that are so insanely different than what we have today, that it's unstoppable, it's inevitable, and it's just like the internet. Now, okay, that's going to take a lot of time, so maybe it'll be 10 years, maybe it'll be 15 years. In the and eventually people will take their mortgages by collecting $1,000 from 1 million people, right? And people will start a restaurant, and you'll be able to crowdfund the restaurant. But that's not where it will start at first. Where it will start at first is like what you commented on, and it will start with the open source services. It'll start with, you know, things that just are brand new business models where the currency has new utility, and it's kind of the safest route and easiest to digest. And there will be bubbles, but by the way, you know, anybody who's been in venture capital knows that 9 out of 10 companies fail, right? How many of my friends have raised insane amounts of money to do another silly little messenger, another silly little like something that sends emoticons or all kind. You know, there's lots of junk everywhere, and I think that this space won't be different. Maybe this space will even be less. Because in this space,
you would expect now 150 ICOs to fail in order to make it economically bad to invest in ICOs, because Ethereum made 150 on the investment. So, you know, economically you would expect, you know, a lot of failures in order to be, you know, standard. Just as an example.
Let's just, you know, I think the excitement is legitimate, but we just need to make a separation between our long-term imagination on where things are going, and then practically not kind of just going wild west and like starting to do illegal things on the internet and waiting to get a phone call from the SEC and go into a very uncomfortable interview. There was a question back there?
Yeah, I think we're converging. I mean, I drink the same Kool-Aid as you guys, and a lot of people here drink the same Kool-Aid, but as Boudewijn says, I mean, the more blatant the scams will be, the harsher the regulatory response will be. So it's also a responsibility of our community to always remain a bit skeptical. And when we have events, and also when we let people speak who have protocol coins or app coins or even equity coins, we always say, people, this is experimental. Don't put in any money that you can't afford to lose, etc., etc. See it as a huge experiment. Still, be enthusiastic about it. And yeah. That's what we need to do.
I totally agree. And by the way, our strategy is with our ICO is that you know, we're getting ahead of the curve. We're being very, very aggressive in making those things clear, not taking investments from territories, or not taking, let's call them, contributions from territories where the laws are not yet smoothed out, even if it harms our ability to fundraise the way we would have ideally wanted, because we understand that we're in a transition period. At the same time, we think that, you know, projects like Bancor and other projects that we see in the space are building very, very innovative new technologies that we would have a hard time building in the way we financed our companies in the past.
Yes. I just wanted to reply to Richard, comment on the threat of this regulatory threat that we made it to cryptocurrencies, and I want to observe that banks spend a huge amount of money for anti-money laundering regulations, and the reason why all that money is spent is really a lot of money and a lot of work for them actually, because every day there are a lot of signals of transactions that they have to signal, and then of course they just have to do it to comply with these regulations. The reason why they spend all of this money is because money laundering is it's a big cost for our society. And the thing is that the blockchain could apply or anyway achieve the same results with much less amount of money and resources. So I think that's also like one of the directions that new like projects should try to achieve, like while
So Stephen, to build on what you said, which I agree with, I think that one of the reasons many banks have been interested in our project, and we'll have announcements that we'll make in the coming weeks and months, is that one of the things you can do with Bancor is build decentralized ETFs. ETFs are baskets, kind of like index funds, token baskets, and these are ETFs that for the first time ever you can hold directly. You don't need to have a third party holding them for you. And the reason so many large financial institutions are interested in this is because they actually have a very big opportunity here in the blockchain. Because they have experience in know your customer and regulation and anti-money laundering and so on, they can be the bridge of trust between the real world and the blockchain. And so there's this concept of asset tokenization, where you take real world assets and you bring them onto the blockchain. And this is the great opportunity for banks and other trusted institutions, right? To take their fiat money, put it on the blockchain, so you have dollars and euros that represent actual dollars and euros that sit in real bank accounts. You have gold, you have commodities, you have oil that is tokenized and on the blockchain. And people are going to start building ETFs and different kind of trading platforms for all of these assets, but behind it will sit a very serious institution that knows how to work with all the different regulations in the various different territories. And I think that's the big opportunity for banks and institutions in this kind of blockchain revolution that is around us.
Don't you see a big shakeout coming up with all the different coins you have at the moment? I think a lot of those coins, I don't see the outlook. Maybe understandable.
So I think that first of all, the shakeup is happening constantly and organically, and look, a lot of people are doing a lot of speculation, and so they're playing. You go into the casino, you play the high stakes game. I don't think it's not kind of the neighborhood grandmother who's going and betting on Dash right now. So most of these people, they know what environment they're in, but what I actually look at is I see. We went to the Ethereum Developer Conference in February. This is kind of when we came out of stealth after almost a year working on this quietly. And one of the things that to me was so compelling about that conference is the amount of really serious teams that we saw that are working on really serious projects. So our friends from Melonport, coming from Goldman Sachs, working on hedge fund management software, and Status IM, building a decentralized instant messenger that can't be shut down. Akasha, building a decentralized Facebook.
Cannot be censored.
Can't be censored, right? There are just amazing projects from really serious people, and it's kind of like the internet, right? Where it's like, if we were sitting in 93 or 94 right now, almost every idea we would have would be a good idea, right? Like, it's a matter of execution then, right? But it would be like sitting here and saying, oh, let's buy plane tickets online, good idea. Let's people can meet each other and date, good idea. Right? Like, nothing has been done yet, right? And so on the blockchain, there's a little bit of a similar feel. And I know from talking to people who were part of the internet revolution, right, and are kind of even older than Eyal, okay, like with people, let's say in their 50s. They'll tell you, people that worked on TCP/IP, people that worked in that time, they'll tell you that this feels very similar to how it felt in the 80s then, except it's 2017 and it's a whole different world that this is happening in, and it's value, not information. And so, but there's a similar sentiment, and just maybe one last point on this. It's one of the reasons it's so fun to work in this space now, because if you were working on the internet in the 80s, everybody's accessible, you call up Bill Gates, he answers, right? Like everybody kind of knows each other, everybody's willing to collaborate, everybody's willing to share, and there's a little bit of this feeling.
No one else gets what you do, huh?
Yeah.
Yes?
I have a question regarding raising money for a certain project. I think there was some talk about the regulation, and that ideas, I think that regulation doesn't really know how to deal with it. Is it a share, or is it a security, or is it... And I've been thinking myself also a lot about it, and maybe, and I'm for sure you also did, so what would be the best way to present like this, to raise money for a project in order to make it acceptable? Maybe when you would say, well, we have this foundation and you can just contribute money, and in return you get like a coupon that gives you forever the right to visit a certain museum, for example. In effect, that could be like a coin thing. Would be the same effect as if you would say, well, you invest money and you get a share. I mean, it's the same concept, but it sounds different.
Yeah, so first of all, I'm not a lawyer and I can't offer legal advice. So everybody should do their own research. And there's some great content out there, right? I think Fred Wilson from Union Square Ventures released some really interesting guidelines on kind of assessing which kind of projects are more like securities and which ones aren't. And I think that right now, if you're building something which is a protocol or a currency or something that has real utility, where you're actually building some kind of service, essentially, and the currency can play, or the token can play a role in that, those are the right projects for this time frame. If you're starting a restaurant and you want to like crowdfund investment for it, it's probably not the right time. So I think open source services are the ones that are relevant for the coming years.
Guy, I'm not sure. I think if you wanted to, for example, do a Kickstarter, say you just invented a new electric bicycle or solar powered bicycle or something like that, and you've got a desk at Makerversity, and you want to crowdfund that. I don't think that is a share in that. It's actually would give you then a right to have a bicycle when it was made. So that.
Yeah, that's like Kickstarter.
Right?
I mean, that would be
and so that's the long tail, isn't it?
Well, no, for us the long tail is a little bit different. For us, the long tail is, I mean, you're right, ultimately,
Yeah.
right? But I think that for us, the long tail that we think is the most practical, and this is what we really focus on in Bancor the most, and that we didn't actually get a chance to show you guys the demo. I mean, you can see it online. We showed it recently at Bitcoin Wednesdays.
You can show it tomorrow.
We can show it tomorrow again. What we're really interested in is actually local currencies. We think that local currencies is a real killer application. We worked on local currency. When we got into Bitcoin in 2011, there was no Ethereum, and so we played around for a while, and we actually launched local currencies all over the world. We had a bunch in Israel, we had some in Ithaca, in New York, and different places in the world, and we saw how they changed people's lives. I mean, literally, it's like, I don't say this is a legal term, but it's like user-generated quantitative easing, and people giving credit to each other locally. Right, I mean, you take a country like Greece, for example, right? I mean, maybe go up a little bit higher in the level. But it's not as local, but let's say within Europe, right? You have a country like Greece. It's importing more than it's exporting, and so its euros are leaving the country. And you can't print these euros like it used to be able to print its currency. And so when you pull out all of the money out of a country, it's like pulling out all the blood out of a body, right? There's nothing to move between the organs. And so all the people are there, all the factories are there, all the potential is there, everything's still there, but like the whole thing shuts down, right? And so when you can give people the ability to create local credit and to augment the national money, and that local credit could be like a local farmer's market, that could be community-based, that can be interest-based. One of our most successful currencies in Israel, in our past company where we were playing around with this, was a currency for moms. We had 10,000 users in Tel Aviv using this, all moms, giving each other credit. They did 1,000 transactions a day between them. There aren't 1,000 transactions a day today in Bitcoin in the entire country. And they did something like $20 million a year in commerce between them. And this is new money they created out of thin air. And we would have people coming to our offices in tears telling us about how much of this new money changed their lives. Usually these were people from lower socioeconomic backgrounds who all of their money, we'll get to you next, who all of their money went to rent and other food and other things that they had to spend their money on. At the end of the day, there was potential collaboration between them that was unrealized because there wasn't money. And so they created their own community. They had the very high level of affinity between them, relatively high level of trust between them. They had their own currency that they made for themselves. They had a marketplace that was integrated into this. And there was just a tremendous amount of abundance and trade between within that community.
Why would people choose to use a small local currency as opposed to one of the more dominant cryptocurrencies? It seems to me that is a good way for everyday people to lose a lot of money. It doesn't seem wise for people to invest in small cryptocurrencies. That to me seems very problematic.
I think
it seems like there's more security in the bigger chains. You mentioned these are people with not a lot of resources. They'll probably lose a lot of money investing in local currencies. That seems to me like a very bad idea. I would never suggest anyone to do something like that.
So regarding securing the chains, so obviously if you're working on Ethereum and you're using token of Ethereum, you're secured by the chain of Ethereum. You're not securing your own token. That's the whole idea of Ethereum. So I think there's no problem there. But in terms of why, and that's I think so in terms of why to invest in why to own local currency versus a share in one of the dominant cryptocurrencies. It's amazing. It's an amazing question because I think this question is one of the things that I see all over my crypto experience almost, because I never came to this world out of technology. That was not I'm my first enthusiasm about crypto was coming from my understanding of economics. And not about technology. Yes, technologically, it's amazing that you can create an international currency that everyone can use. But economically speaking, I think it's a really bad idea to have a single currency for the world. And why do I think it's a really bad idea?
I'm not saying a single currency for the world. I'm saying most likely we have a world with multiple dominant cryptocurrencies, right? But why would a normal consumer use, say, cryptocurrency number 150 in the list because that's their local currency? Mm-hmm. In the context of international digital money, why use these smaller coins and expose yourself to so much risk when there's more liquidity, there's more certainty, there's more infrastructure built up for these larger cryptocurrencies? I don't really see the use
okay.
For
that question, we created Bancor. For that question, because the continuation of this story about this local currency is that it was working great, but over time we saw that we have a real problem as more and more currencies were created in our system. So the first thing is that they all wanted to kind of being able to exchange between the local communities, and each local community was not big enough in order to have enough liquidity in an exchange, in order to have enough trading volume and exchange. So, what? I'm describing the problem. The solution will come later.
Maybe just talk your background on local currencies in general, over time, over history, in many cases.
Yeah, I mean, we can go into that as well. I mean, local currency, obviously there are thousands of local currencies that have been all over the world, and we see a lot of examples. There's actually $30 billion of trade in business-to-business currencies alone. $30 billion yearly trade in currencies like VIR in Switzerland and trade dollars in many circles in the United States. So there are many examples of successful. It's just, for us, it was more of a matter of understanding why are they succeeding and why are they beneficial to their users. But so you mentioned the problem of liquidity that I said, you know, we saw that problem and we thought to ourselves, how can we solve that problem with using the tools that we have? And the second thing that was problematic is that those currencies were isolated. They were actually not liquid to national currencies, so dollars or shekel. They were not liquid to that at all. They were isolated islands, and they were doing great as isolated islands. But we saw that there is a problem with integrating businesses to use those currencies, because businesses usually have some hard costs, and they would say, you know, I need at least half of, you know, what I get. I need to be able to kind of convert that back to our national currency in Israel, shekels, in order to kind of cover for my cost, or to dollars, and we saw that as a problem as well. And Bancor as a project was initiated because we found a solution to this problem. We found a solution, and I'm inviting you to read the white paper. We found a solution to guarantee continuous liquidity to any token, no matter what his size is. So it's always going to be liquid. You can always convert any token to another currency and another currency to that token, but it's going to be on a variable price. The price is going to change. So there's not going to be there's liquidity or there's illiquidity or there's low liquidity or high liquidity. It's always going to be liquid, but the price is
If I
different.
understand it, you're leveraging the larger cryptocurrencies in order to supply that liquidity, if I understand it correctly.
No, what we're leveraging is the ability of tokens to hold other tokens. Because today when I have my shekels or my dollar cannot hold another currency.
I suppose my question is, why not just use Ethereum or Bitcoin instead?
Okay. So
Comment as well. He's raising his
No,
hand
the thing
for
is
like
that
a quarter.
if you, so Justin has a lot of skepticism against local currencies, and I think that your main answer will be that Bancor has ultimate liquidity, but that's only one of the issues with local currencies in Justin's mind, because I think your main issue is what is it backed by, and some local currencies are backed by just demand, but most of the local currencies that are in operation now are pegged to the dominant fiat currency in that country. And it's either a local government that guarantees the value, or local commerce people, local, how do you say it?
businesses.
Local business people who actually give out credits and create the currency. And the aim of local currency is, well, if you have a sarcastic view, it's protectionism. So
Yes.
you create a currency that people only can spend locally, and so the extra value, the money people make, the profit people make, is kept locally, and so you protect your local economy. So that's why in Southern Europe and Greece, these local currencies are really popular.
But that seems like it's just restricting utility. I'll go back
Well,
to
it
But
is.
if you have
It
liquidity, how is it restricting utility? If I can convert the currency,
I mean, the example you just gave can only be used in local areas. for
Yes.
instance. That's a definite restriction on utility. Why not just use Ethereum, Bitcoin?
so I'll tell you why not. I'll tell you why not. I think that we learned from gold, from the history of gold. And this is what Guy was referring to earlier. If you have, let's say, a geographical area, no matter what it is, that is using a currency that is being used in a larger geographical scale, because most of the commerce that we do is local, right? I mean, it's just the nature of how we operate. A lot of the money that you spend in your life stays local. When you buy in the supermarket, the employees are local. Most of it is stayed locally. So the economy, by its very definition, is very, very local.
I
And
disagree with that. If you go to the supermarket, most of those food comes from other countries.
right, but I'm saying a lot of the money that you will pay for is for all the people that operate the supermarket. That you have to pay their salaries. So actually, in those other countries, they're not making so much money. But I'm saying that there are researchers about that. A lot of the money stays local because, when I need services, when my son is going to school, his teacher, a lot of services and a lot of products are products and services that we consume locally. That's just the nature of economy.
So that answers your questions maybe
Or-
ideological then?
No. I'm getting to why having a global currency is not necessarily a good idea. And
They will dictate the price. So suppose these guys would trade milk, which is locally produced. There would be sort of, if it's the euro or the Ethereum, whatever, there would be a standard price, which would then be put on this local community, where it may have a different value locally. So because you have a local currency, it would be, you recreate the local currencies of the countries, basically.
I think we'll definitely see very different parameters in that environment, which is not so practical today given today's tools. However, it's very important. The example with Greece that Guy gave earlier, I think it's very critical to understand in order to understand why having a larger scope currency is not good for you. Because if I'm from a region that happens to import more than it exports, so in the example of Greece, it means that they will have less of that global currency locally. So they will drain out, mathematically speaking, if you import more than you export, you will drain out the local currency, and what will happen is that your economy will collapse,
So
like
you
we see in
create money.
very...
And you create inflation. And eventually the Greece drachma will lose value opposed to the euro, which is good for the Greece economy, but the individual Greek is forced to use it in his economy, whereas in cryptocurrency he can choose, oh no, actually I'm not going to touch that, I'm just going to use Ethereum because it's all so very usable, and I'm going to just forget about the Greek currency. And that will be, in my position, my expectation, because your examples are based on history, and then you are right. But now that we have this open community and everything is interchangeable, all currencies, then I would agree with Justin and say, well, why would I hold on to this local currency that's inflating based on those examples you just used? Because you need to create more or whatever, otherwise it's losing, or I'm forced to...
I'm not saying that you need to create more. I'm saying that it cannot go away. I'm saying that if you have a currency for a specific country, then this currency is not going to run out of the country. It's going to stay in the country. Well, if I'm using euros in Greece, I might just have less and less euro every year. But if I'm having my own currency in that geographical location, it's not going to go away. That's what I'm saying. The value of that currency can go up or down. People can have policy where it will be inflated or not be inflated, but it will be a currency that stays there. That's the point.
How would you suggest that the currency stays there? Restricting IPs? Practically. We're talking cryptocurrency here. How would you guarantee?
I think that it's the same reason that we have Israeli shekels. We're a small country. We have shekels. Shekels, by and large, they stay in Israel. There's very little to do with shekel out. This is our community currency. It's a group of 6 million people that says, okay, that's our currency. That's what.
There seems to be no way to actually restrict it in the way that you're describing.
No, I don't think that it has to be restricted. I think that it's not about being restrictive. It's about accepting. What's special about Israel is that every business you go to will accept shekels. This is the social contract that you have. Or if you have to another country, if you go to another country, they have a different social contract where they accept the currency. When you go to this moms group that we created, they have a social contract that they will accept that currency. And that's what gives the currency. Every currency in the world, by the way, in the history of humankind, gain its value from one thing and one thing only: by those who are willing to accept it in exchange for products and services. Nothing have ever given value to currency other than that. Only that.
Widely adopted, largest cryptocurrencies would therefore have the most utility, not small local currencies.
Again, utility in a world of interconnected currencies, you cannot even say that Bitcoin has more utility than Ether, because one of the utilities of Ether is being converted to Bitcoin. So it cannot have more utility. what it has, it's a different technology, it's a different set of users, but it cannot be compared in terms of utility because it's connected. It's like saying that the internet in Israel has more utility than the internet in the United States. They are connected, they have the same utility.
So you argue that Ethereum has more utility than Bitcoin today? I can make that argument.
No, not Ethereum, Ether. We're talking about currencies here. Ether as a currency does not have more utility because you can convert Bitcoin to Ether. So it has the same utility. So we should be very precise on.
Ether is cheaper and faster.
Huh?
Ether is cheaper and faster.
The Ethereum is cheaper and faster.
Ether, you use Ether as an example.
Oh,
Ether is cheaper and faster.
in terms of his feature, I agree. It is cheaper and it is faster. But I'm saying in terms of what you can do with it, what you can buy with it, you can buy the exact same things with Bitcoin and Ether simply because they are connected and exchangeable. And I think that what Bancor is doing is giving the same feature, the same level of connectivity to any currency, not just the large one. Because today, you can say that about Bitcoin and Ether, but you cannot say that on this very small currency that was created by a group of people in Israel. But when you have a solution for the liquidity between all currencies, so you can say, oh, they all have the same utilities. The question is who accepts them? And the reason that Golem worth money is because I believe that there will be those people that will accept Golem in exchange for competing services. And that would give Golem the value.
And what could give a community currency, I'll give one example, I mean, you can give hundreds of examples, but what could give a community currency value is there's an entrepreneur. He decides to create a currency for all the local farmers in the area. He goes out, he talks to all the local farmers, he negotiates with them, they all agree that they will all accept this currency and they will offer a 10% discount for whoever comes and uses this currency. And so now this currency has unique value in this specific territory. And you can think about this both across different locations, and you can think about this across different interest groups as well.
What would happen if the trust in the currency is lost? For example, we have now South Sudan. Nobody wants to have the South Sudan.
So I think one of the big promises of blockchain is that you don't need to have a currency that someone can just print, like in national currencies. Because in national currencies, you can have a currency that someone can decide to print it, and he will just do a quantitative easing or whatever, and just put a lot of new money into the circulation. However, when you're talking about, let's say, Ethereum token, then you can go to the contract and you can see exactly what can happen with that token. The rules might be that this token can never be printed by anyone ever. And the rules might be that someone can print a limited amount, or they might be that, guy is allowed to print as much as he wants. I mean, how specific the rules could be when you're talking about, so it allows you the limited trust, I would say, scenario. When I don't really trust you, but I see the contract of the currency, and I see who can do what with that currency, and I trust that.
Or maybe, let's make less out. The working example of restricted currencies are gift vouchers or air miles. Where as a business, you issue money that only can be spent at that business.
I just think given the choice, people prefer to use the more dominant cryptocurrencies.
Definitely.
That's my point that I'm making.
Definitely,
Yeah.
but sometimes issuing your currency can be a means to make your business stronger or to make your local community stronger. So that's why a lot of these local currencies are actually backed by the local government, where you can pay your taxes with a discount in that currency.
Municipal taxes, for example, are sometimes municipal taxes.
Yeah, exactly.
Sometimes can be paid, or part of your municipal
Mhm.
taxes. That's one way a municipality can instantly kind of seed value into a local currency, and then it can decide, for example, to issue that local currency to people who are going to be participating in various public works. I'll give just one.
Okay.
Just one more.
Small example, there was another currency that we had a few dozen different ones, and there was another one which was actually run by the Ministry of Education in Israel, and the idea was to kind of give kids financial education. But one of the ways that this currency was issued was kids in middle school and high school actually had to volunteer at homeless shelters and animal shelters and various different stuff, because you have to volunteer X hours in high school to graduate back home. And so when you did this kind of community service, you were issued this currency, and then the kids would use this currency to give each other, to tutor each other, to sell their World of Warcraft characters, to trade cell phones, to do all kinds of, you can call it barter between them, right? So currencies can represent values, currencies can represent loyalty programs. I mean, all currencies are kind of a loyalty program. And I think it doesn't need, there's this other, one of my buddies used to say, it's not either or sometimes, but both and. Right? So I think that people will have national currencies, people will have dominant cryptocurrencies, and people will have a few local currencies that are relevant to them. I'll have maybe the one in my town, I'll have the one that's for musicians, and some other hobbies or interests that I have.
One point it's really important to say about this kind of using few currencies, like the self-interest of people to use like 1 or 2 or 10 dominant currencies. The thing with that is that there's this thing called the concentration of wealth. And it's a big problem. It has been through the history, concentration of wealth. This is was one of the biggest problems with gold. Because guess what? If someone is concentrating some wealth at his, at his disposal, he will use that wealth in order to affect the rules and do whatever needs to be done in order to make sure that he increase his wealth. And that causes concentration of wealth. So if I'm to use a currency that has a lot of concentration, and some of those cryptocurrencies out there, like even Ether and Bitcoin, are very concentrated, relatively speaking. If I'm making the decision that that's going to be the currency that I'm going to accept, I'm essentially saying that I'm putting myself in a very disadvantaged position relative to those who got there early. And Roger Ver has 300,000 Bitcoin, and he's gonna I can work 10,000 lifetimes for him, and I wouldn't be able to, and he will be able to pay me for 10,000 lifetimes that I'm a slave to Roger Ver. And libertarian philosophy was talking about the fact that you have this concept of competing currency. I mean, we didn't invent any of that, by the way. Nothing is original. So everything we talk about is like you were trying to kind of make sense of things, but those are not new ideas. And the idea behind competing currencies is that if you now use, you have a group and you use this currency, and some people in your group are worth 1,000 times more than the others, and so I have a choice. I have a choice, and I say, I'm not standing for that. I'm standing for more equality. I'm not going to accept your currency. What are you going to do if I don't accept your currency? Not willing to be paid with that currency. And that's the freedom that people have in order to kind of, I would say, fight back concentration of wealth. And decide for themselves what kind of currencies they want to take part of. And we look at that as, if you have one currency for the entire world, you're going to get the money more and more concentrated, and you're going to get a very clear class system that we saw emerging in so many cultures throughout the history. But if you have so many currencies that are interconnected to each other, you have this fractal model that is much more equal and much, I would say, more social, and connected to the root of our economy, which is essentially most of our dealing, most of our collaboration, of human collaboration, we're doing with the local people around us. Yes, we're doing some collaboration with people from the outside, but most of it we're doing with the local people that are around us.
But if I understand you correctly, and correct me if I'm wrong, but from what I understood, you said, well, they all be packed to the main, let's assume Bitcoin or Ethereum, whatever. And they are interchangeable against a certain value at that point, so that larger currency, whatever that may be in the future, would work as the new gold standard. That would be the goal, and your small currencies would relate to that
so
standard.
So the model that we are building is not a model where you have a currency that has to be gold, or which is the new gold.
I'm
but
sorry, you have the small currencies?
Yeah.
And the question is, well, how do you define that value? And you say, no, it's all now pegged to the
No, it's
local
not pegged.
currency.
It's not pegged. It's not pegged. I mean, it is pegged with many local currencies today. I mean, this is true. The reason that it's pegged and we think it's bad that it's pegged is because they need to be connected to the larger economy. And the only way for them to be connected to the larger economy is finding a solution around pegging the currency to the national currency. And sometimes it means that it's not really expanding the money supply and it's not giving any quantitative easing, because what you're doing is like coloring money in a different color and you're calling it local currencies. There are a lot of arguments for and against this, but if it's pegged, it's not a different currency. That's my vision. Something which is pegged is the same currency in a different color, because I can always exchange between the two on the same value, right?
Where do you get the idea from that those people spend their money locally?
That people spend their money locally?
My father-in-law is a great server, 91 years old. He buys most things on the internet, gets stuff from the store which is manufactured throughout the world. So I think most of the money he spends is to go to the economy far away from him.
So we can look at the numbers, but I think that first of all, every service that you ever get from anyone is almost by definition local. I mean, there are very, very few services that you get, like the teacher at the school and the people that fix the stuff and build the roads. I mean, almost every service that you get is by definition local. Now, products, yes, you can buy it from all over the world, but it's always going to cost more in a just world, not in a world where in Bangladesh you can get slave kids for $1 a day. In a just world, it should cost more to bring a product from overseas to here, so it should be theoretically more economically smart to produce as much. Still, I mean, you have to ship it from a different country. I mean, if it's from the same country that you live in, it's also, I would say, local in some sense.
We have a local European currency. It's called a euro.
Yeah, I understand that. I'm talking about geographic right now. That, for example, if you're from Greece. So I'm sure a lot of the produce that you buy, like, I don't know, a lot of the vegetables and a lot of it would be from Greece. And some of them going to be imported, but this is because of the, I would say, the way that the current economy in the world works, where, some countries are getting really low wages and kind of really bad conditions. So it's happening a lot. So you have countries that are sewing our clothes and building our toys for the West. I don't think this is sustainable for too long. What I'm saying, I think it's really hard to challenge that most of the collaboration, the actual economic collaboration that we're doing on base to base, even not most of it, I'm saying that large enough part of it is happening on a local basis. That's the claim.
And the anti-globalism is going to encourage the existence of local currency.
I think that in a world that will get more and more equal over time as countries progress and kind of discover, learn to use technology, and it would make less sense to bring carrots from another continent. That's the general claim. Yes.
I would like to mention to the group, for anybody about this topic, there's a book I read a while ago. It's a beautiful book, actually. There's a Dutch guy, and he's been doing a lot of projects on local currencies. It's called Over een ander soort geld van Henk van Arkel. And I think he's involved in Stichting Stro.
Yeah.
So anybody who's interested in exactly this topic, I would encourage you just get the book. It seems to be only 20 euros. Maybe you can buy it in crypto.
And if you want to read out on the source of Henk van Arkel's ideas, it's actually a Belgian guy, sorry. Bernard Littard, he's written this book about the future of money, and most of the ideas on local currencies are based on his work. Actually, some people who developed the predecessor of Ripple were inspired by Littard. So probably Liettaer.
Yeah.
You guys have read this
We are big fans of Silvio Giselle. He's one of the greatest philosophers of money, and he actually did I think one of the most amazing experiments with money, the miracle of Vogel. Have you ever heard about that? Anyone heard about the miracle of Vogel? It's amazing, huh? That this is just to go to Wikipedia and read about it. I mean, in the midst of the Great Depression, where like 50% or 60% were unemployed in a small city in Vogel in Austria. And the mayor was reading that book of Silvio Giselle and thinking to himself, I can create this kind of money here. And he did that. He created a local currency for his city, and the local currency had a feature called demurrage. And the demurrage means that the money is losing, in this case, 1% of its value every month. So if you have $100 today, in 1 month, this bill is going to be worth $99, and in order to kind of validate the bill, you need to put a stamp on it that costs like $1. So you have places for stamps for each month, and that would keep your money valid. So people wanted to circulate that money. They didn't want to keep it. They didn't want to pay that tax. So the circulation, they were planning to issue like, I don't know, 60,000 shillings, and they end up issuing like 20,000, something like that, because the circulation was like 8 times more than regular money, because people were just just buying stuff with it. They didn't want to keep the money. And what happens when money circulates, which is what money is supposed to do, that's the whole idea of the technology, is in order to facilitate collaboration between people. When that money started circulating, guess what? The unemployment gone out of the window. They got to 100% employment like in no time. The city was flourishing. Every other city around it was initiating a project of a local municipal currency following the example they saw with Virgil. And they were paying with this currency to local projects and to people to do stuff that was important for that city. At that point, the central bank intervened and told them that they shouldn't really create their own currency, because the only legal currency of Austria should be the one created by the central bank. And the organizer of this whole project are expected to go to jail unless they stop. So they decided to stop. And that was the end of it. But it was in the 30s, and it was a very, very important lesson in history and about monetary theory, which again, this is where we came to the blockchain place. We came from the economical, monetary perspective, not from the technological perspective of it, of what you can do with it. And we see a lot of people that came from a technological background that I think naively thinking that one currency for all is great. And we're trying to say, no, it's not good.